Welcome to the closing beat, everybody. Happy Friday. I made sangria. It's Friday, right? A little sangria with the mix there. Welcome to the speakeasy side of things. This is where we normally have our class for customers on Thursday nights, which we did last night. And we just thought we'd hang out with you guys here today. This is the show we call the closing beat. It's a stock market update show where we go over the good, the bad, and the ugly in the stock market. And yeah, this is what we're going to cover today. We got a lot of good to talk about. Before we get started, we've got a winner, Guess the Dow. Every single Friday, we announce the winner of Guess the Dow. And our winner this week is happens to be a customer, David Talman, 26710.15. David guessed where the Dow would close the week. He was the closest without going over. John Z, I won't say your last name, but happens to be a customer as well. He was the second closest. There were not any other guesses higher than that. I think there were some typos there, but well done. So David Talman gets $100 credited to his account. We've already notified Mr. David. John, you have to try again. But you know, hey, who could have predicted today, right? We were supposed to have jobless numbers. They were supposed to be a disaster. Turned out to be not so bad. We'll cover that in a second. Also, our jazz artist of the week is Miles Davis, and the song for you to listen to tonight is the Concerto Anaranjes. Actually, if you're a drum corps fan, that was Madison Scout's ballad in 1995. Not to date myself or anything, but if you happen to be a drum corps fan, look up 95 Scouts. You'll enjoy it. It's a good show in general. All right, let's talk about the stock markets here today. You see a bit of a blast off on your screen there. This is a new sort of, we've been working on fine tuning our closing beat. I think today's the day. I think we got it right, but you got to blast off in the stock market to celebrate our change here of the closing beat design and function and everything. You can take a look. I mean, it's just good across the board. The Russell was by far the best performing index of the day. It's now down less than 10% on the year, 9.7 to be exact. That's cool. Financials and industrials were the leaders there in the Russell 2000. So very good performer today. That was the best performing index. The Nasdaq was it was the worst performing index, but I mean, it was still positive on the day. It was just worst performing. It is officially back to all-time highs, now up almost 9% year to date. So incredible there. Let's go over to the charts and take a look. We'll go to the Nasdaq first, since that's the one that made the new all-time highs. There you go. Just as if the virus never happened. Leaders today in that are going to be Apple and Microsoft. If you happen to be looking there, Apple hitting new 52-week highs. We're going to talk about Apple in a second, actually, but that one hitting new 52-week highs as well. And Microsoft breaking out to just a little recent high, but obviously very strong. And those two were the biggest contributors to your, the two of the biggest contributors to the Nasdaq gains on the day. So just to help you out there, biotech was the biggest drag overall, and you know, it's what it is. That's just what held you back a little bit. And so there you go. Jobs numbers. We can take a look at that. You got jobs numbers. They came in at 2.5 million, a gain of 2.5 million. Almost every analyst was expecting a loss of 7 million. So we were expected to go this way, and instead we went this way by many millions, right? So it was a big deal, right? That was the excitement that shot the markets a little bit higher on the day. And so that's what you have there. Consumer credit also contracted. I was going to give you guys a kudos or a heads up for that one, but consumer credit contracted, and it wasn't because you guys are spending less or not using your credit cards as much. It was because the banks became more restrictive, right? Over the coronavirus there, they stopped the whole idea of, well, you know, letting you have credit. And so that's the reason that happened there. I've got a warning for you, right? Got a warning for you, and hopefully the charts come back up. Let's see where we're at here chart-wise. I want to make sure this thing came back up. Anyways, got a warning for you. So the average stock in the S&P 500 is now trading above analysts' 12 months expectations, right? And I'm going to share a few things with you. So we're trying to just kind of explain how this works. But analysts are typically right within a certain margin of error. They're not usually very wrong. This is super rare that analysts are so far off at the moment. Never has there been a time in history where the spread between the current average price in the market and where analysts expected things to go has been so wide. It's not because they're wrong, right? So I really wanted to focus on that today. This has never happened. They've never been this far off. To give you an example, the average target price, $92.50, and actually keep me updated if it comes back. $92.50 is the average target price that the analysts have at the moment. So if you take the S&P 500, average everything together, you get 92.5 is the target price. The current price in the market, this is not even including today, by the way, is $143.20. So they were expecting $92.50 on average. They got $143.20. See how you can't see my hand anymore? That's over 55% difference. The spread is 55%. So you mean to tell me that analysts are 55% wrong? It's not the case, right? It's just not the case. They are not going to be wrong. In other words, be very careful. The extreme to the upside here in the markets is far exceeding anything that's reasonable and valuable for an individual stock. I just really, really want to point that out. That's a big deal there, right? That does not happen. It has never happened. So we're not talking about something that's just kind of fun to share. This just never happens, right? So anyways, that's what you got there. Okay. In the S&P 500, as of today, 98.2% of the stocks in the S&P 500 are above their 50-day moving average. It sounds very bullish. It sounds exciting. It sounds like a good thing to have there. But the average stock is 15% above the 50-day moving average. How'd we do over there? Anything? Yep. Okay. Okay, so anyways, just wanted to tell you, be careful on that, right? Just be careful that we are so extended here in the short term. We covered this a little bit last night for our customers. I'm going to cover it in the Notes for Jazz email today as well. But you have over 80% of the S&P is considered overbought by industry standards. Overbought just means one standard deviation away from the 50-day moving average. I'll help you with that in a second, right? So what it basically means in super duper easy to understand terms is that essentially 80% of the S&P 500 is trading at levels up here that it only spends about 30% of its time, right? So we're at a level that we just don't normally hang out in, right? The average stock in the S&P 500. Normally we're down here just hovering around, trending and everything. We're spending time in an area that we only spend 30% of our time in. Not cool, right? That's considered overbought, right? At 2 standard deviations, which would be like Equifax. If you look at Equifax, that would be one, is 2 standard deviations away from its 50-day moving average. That is essentially the same as saying the price of Equifax, where it's at right now, spends only about 5% of its time up there. The rest of the time, it's lower inside of a normal trading range, closer to its 50-day moving average. You have so many stocks that look like that right now that are trading at levels that they don't spend time at. They just don't hang out there for long, which you have to imagine it gives you that picture of people that are just super excited and obviously getting too excited about the stock market overall. Wednesday's reading, we got 80% of stocks in the S&P 500 trading 1 standard deviation or higher away from their 50-day moving average. It's considered overbought. Any technical analysis would say, all right, that's overbought. Not bad. We can stay overbought. Not a big deal. On Tuesday and today, we got almost to 84%. That's never happened. So you look back 15 years and just look at any other time. It's never happened. We've never had 80% of the stocks up this high. That's the lesson today, is to tell you, we're going to be doing a membership site soon, so we'll have graphs and everything to share with this. But that has never, ever, ever happened. So I just wanted to keep you updated on that one there, give you an idea of what's really going on. Oh, I'm on a different network. That's what it is. It's not going to come back. So overbought. Extreme overbought, right? That's kind of where we're sitting at the moment. Anyways, let's move on. So we got, we'll cover this again on Monday because I want to share some more with you. I'm still working on some things. Fin tips videos. We did choosing dividend stocks on Wednesday. Today we talked about tax brackets. Very basic class today. It was a very basic one. I saved it for a Friday. Just a little fun there. Wine and wealth last night. We talked about our, we did portfolio updates. We did some research. We talked about the markets being extended. Today puts them in a severe condition, right? Things that have never happened are happening as of today in terms of being overbought. Just be careful there. All right, let's go over to the sector breakdown. We'll talk about this real quick because it's just really everything was positive today. It was just kind of a good day. I mean, anytime there's a big up day or big down day, I kind of feel like, hey, maybe there's, not really much to talk about. Energy was the best performing sector of the day. And it was the best performing sector of the week, by the way, but largely due to today's performance. XLF and XLI, those were your better performers today. Double-digit gains for the week. Every sector in the market was up 1% on the day, so really cool there. The XLF and XLI, they stole the show, or they were the good ones today, but energy stole the show. You had broad rallies in CVX, ExxonMobil, etc. Healthcare was at the bottom of the list. Yeah, healthcare just doesn't want to play along. Right? We're to finish off for the day. Yeah, bottom of the list. Still had a good day. I mean, I would say it's not as bad. It's just weaker on the day. You got Vertex back to the 50-day moving average, and overall just wasn't as good of a performer there. Sector breakdown wise, that's pretty much all I had. I really wanted to focus on the extreme that we're seeing in the market. You got to recognize this. If you're an average sort of retail new investor and you're thinking today was the day to go ahead and dive in, you are diving in at areas that we've never seen before in terms of the number of stocks that are overbought. So really, you want to participate in that? That's careful. Just be careful there. All right, technical breakdown for the day. Not a whole lot here, really. There were 25 new highs, 7 sectors represented. That's cool. Tech, industrials, healthcare, they had the most number of stocks hitting 52-week highs. It was a broad tech mix. You had Adobe, Autodesk. You had Clack in there. So you had semiconductors, software companies. That was cool. You saw tech kind of kick back in. We talked about this yesterday, that there wasn't a whole lot going on there. From tech lately, they finally kicked in, looking good. No new lows. All right, so no new lows to speak of there. That's good. Airlines came up to the 200-day moving average and then sold off. So pretty weak there. And yeah, that's pretty much it. You happen to notice Occidental Petroleum, good breakout there. It's a second tier kind of a breakout, but Apache and Marathon Oil did the same. And then other than that, we'll move on to stocks in the news. I'll make it like a day where we take your questions and stuff because it was just good across the board. Unless you're a Bitcoin trader, it was just a pretty good day. Stocks in the news. What you're going to have starting Monday. Let me actually see here. Okay, Monday, you've got Casey's General Stores reporting. You've got Stitch Fix reporting. You familiar with Stitch Fix there? They laid off 1,400 stylists in California because they're going to go hire them in cheaper areas. Agree or disagree, that's one of their decisions. Stitch Fix has beat on earnings every single time they've reported. They've only reported 10 times. They're a newer company there. But the second quarter, which they're going to report on Monday, is their best quarter. They have 2 Q2s that they've reported, 2019, 2018. 2019, the stock gained 14% in the second quarter. That's the best that it's done. 2018, 16% in the second quarter. That's the best quarter that you can have. So if you're interested or have Stitch Fix, I'm not telling you to buy it. I'm just saying the very small stats show, hey, they beat on earnings. They're looking good. It's a strong company. I have no complaints about Stitch Fix there and what they're doing. But the second quarter tends to be the most active. So you're asking for volatility on Monday as well. Mentioned Casey's already. They're coming in as well. Got a lot of stuff in the scroller below, so we don't need to keep up with that one there. And that's really it as far as earnings that comes up on Monday. So yeah, that's pretty much it. We'll cover some additional stuff on Monday as far as the markets being extended. And if you're one of our customers, our notes from Jazz email that I send out on Saturdays, we're going to go in more depth into a lot of this because it just gives you a reading to kind of see what's going on. And if you own individual stocks, I like to give you guys a heads up on that when I can. All right, let's take some questions if you have any. We'll see what we can do. You want to sell Marathon Petroleum? Well, that's a tough one for me to say. I don't know if you bought the dip or where you own it. Obviously, it was a great day today, Marathon Petroleum, but also the other ticker there, Marathon Oil, did pretty good as well. I mean, 17% in one day. So I can't say if you should sell it. I don't know much about your position, how big it is relative to everything else, where you bought it, etc. But good move. I think you're happy, right? You're happy. I like it. Royal Caribbean had a good day as well. Yep, 20%. That was one of the 20% gainers in the market, and there were more than one of them. Occidental, Apache, Marathon, Carnival Cruise. Oh, no, I'm sorry. Carnival Cruise got to 16 at the end of the day. Norwegian, 14%. Boeing, 11%. Looking good there as well. Adobe as well. Yep, coming up next week. You got it. Ooh, you got Carnival Cruise for $11. You're a happy camper. You got a double there. Good job. I like it. We're reopening there. Disney did hit the 200-day moving average today. Remember, we talked about that yesterday. Hits the 200-day moving average. You expect to see that be a profit-taking area. It was a profit-taking area today. That was awesome. Yep. I agree. That's cool. If you have $10,000 to invest today, you keep all in case of, I'm not sure what the question is there. I don't know that I have the answer for you there. Facebook did good today. No complaints about that one, up 2%. It had a rough week, by the way. Remember, Facebook was relatively weak compared to a lot of the stocks and the markets for the first part of the week. So to see it perk up today, I would be happy with that. Yep. Yeah, no doubt you've got some a hint of short squeeze in the airlines there as a percentage of the float of like American Airlines and United and everything. It was high. I got you. You love the riot list. Yeah, sorry it was raining through that. We've got about another 30 minutes and then it's going to rain again today. Pretty bad. It's a tropical storm. So here I'm thinking like, holy cow, it's raining. It was a tropical storm. I hadn't even noticed. I didn't even look at the news. Yeah. I look at areas where people have taken profits before, where we've seen weakness. You've got some room to run on Tyson, provided that this whole price fix. I love it. Southwest Airlines is lagging behind other airlines. It could be because they have more 737 Maxes. I don't know exactly. Yeah. Yep. If you gave me $10,000 to invest in the market, how much would you invest at the moment? I wouldn't encourage you to put $10,000 in one shot. We would just start there, right? If it was a retirement account, you couldn't do it anyways. Yeah. If you buy fractional shares of Apple, well, anywhere. If you buy fractional shares in Apple, will it contribute to the wash sale with the same ticker at other brokerage firms? Absolutely. Yeah, doesn't matter whether you have fractional shares, whole shares, or not. If you own that position as a human being, right? As an individual, if you own that position in multiple brokerage accounts, you sell for a loss in one and you buy back in another one, you absolutely need to wash that out. Oh yeah, and if you don't, the IRS will. And they think that they're just writing off losses. The IRS is very quickly catching up to that. Yep. Citigroup's been good. Yeah, Monday I'll share some data with you on financials. We'll talk about financials as both a short-term trade, long-term investment. Which one is it? There are some sectors that are better investments than they are trades, and then there are some sectors that are better trades than they are investments, and we'll break that down on Monday. I like that. That'll be our focus on Monday, for sure. Or at least one of our studies that we share. And I'm just trying to bring a lot of this to you so you can see it when we do the research site, which should be live maybe 2 weeks at the most. What we're trying to do is offer data and research and stuff in exchange for you joining. We can hire a developer, which is what we want to do. So I'm trying to share some of that data with you to see if that's something you're interested in and get feedback and stuff. So we'll do that on Monday. Absolutely. Do something on overextended markets and what happens. I did a long time ago. It is a good time to maybe update that now that we have access to more data, better stats and stuff. I like it. Well, I like it. I like it. That sounds great. Yeah, cool. Well, I like it. So I like it. Everything seemed to go pretty well today. Couldn't share the charts with you. That's my fault. That's not anything that we messed up on in terms of something being wrong we can't fix. So I'm happy with that. Everything else, smooth. It took us all week, but we got it right. Huh? You stick with it. You know, when you build something, you stick with it. That's what you do. Hey, I'll wrap it up there because I've basically covered everything that I wanted to cover. We're going to expand on a lot of things we talked about on Monday. So come back Monday if you want. We'll cover some of the things, some visuals, some more data to offer. Be interesting for you. And I'll wish you a great rest of your weekend. Enjoy. And thanks for watching. We'll see you later. Adios.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.